Obviously, you had great numbers across the board when you look at things like revenue and adjusted earnings per share, but it was the gross margin that analysts have been kind of pointing to and saying that they're concerned about that. I think the number dropped to 66.7% versus the 72% that the analyst consensus estimate was. And it was below the 80% you all were averaging before the pandemic. I think the big issue is there are a lot of people who are using Zoom, but a lot of people who are freeloaders who are kind of glomming onto the service. And you guys have to provide a service for all of those people who aren't even paying. How do you kind of handle that? How do you deal with it?
Well, during this pandemic and time of disruption, we feel really strongly about doing everything we can to keep people connected. And we have over 125,000 K through 12 educational institutions around the globe that are currently using Zoom for free. And we did see an increase in usage in September as, millions of students and teachers went back to school virtually. We also are happy to provide our service for free too. We do have many free hosts, as you indicated. We also do things like on Thanksgiving, we turned off the 40-minute limit to allow families everywhere to stay connected. And yes, there are costs associated with that, but we absolutely believe it's the right thing to do. And for the long term, minimizing disruption that we're all feeling during this pandemic is our goal.
You did mention last night on the call that you're expecting the gross margin to be reflective of what it was in the third quarter, at least in the early part of next year. When do you think you can improve on that gross margin and get it maybe back to levels that you've seen in the past?
Well, so the impact to the gross margin is a combination, as we just talked about, of free users. And we are absolutely committed to continuing to supporting schools and free users during this pandemic, which, is difficult to predict, obviously. And then the other aspect of the impact to the gross margin is due to our increased usage of public cloud providers. So historically, we ran most of our traffic through our own servers and our own co-located data centers. And we've had to increase this capacity very quickly. And to do that, we've partnered with some great public cloud providers, which comes at a little different level of cost. And so we are working on building out our own data center infrastructure, but that is a multi-year project. And that's why we indicated that everybody should expect to see these gross margin levels continue for the foreseeable future.
Kelly, I know you had some big new customers that you signed and got additional services that you're providing to, like Peloton and Rakuten, during the quarter. But there has been a little bit of concern that the biggest customers, those who are out there paying the biggest bucks, have really been monopolized to a big extent by both Cisco and Microsoft. How do you go after some of those big customers who would be willing to pay a lot of money for your services?
The competitive advantage that we see for Zoom is the ease of use and the reliability of our platform. And we hear from our users and customers every day that that's what attracts them as we're delivering happiness to them. And we're very privileged to have actually some of the Fortune 10 names in our customer base. And we continue to see customers like that and prospects like that coming to us because of the value that they see, not only in our meetings platform, but also in things like Zoom Phone. We were super excited that both Rakuten and Peloton extended their relationship with Zoom by buying Zoom Phone. So we're very excited about the prospects ahead and continue to make progress across all aspects of our segments, from small business up to enterprise.
Shepard Smith here. Thanks for watching CNBC on YouTube.